GOEV's CEO just spent twice as much on his private jet as Canoo made in all of 2023 combined, and I'm talking revenue, not even net income. Canoo made $886,000 in revenue last year, and their CEO, Anthony Aquila, I believe is how you pronounce it, has decided to spend $1.7 million on the new corporate jet. Those following GOEV know that the stock has been doing really, really bad lately. The shares are trading at $2.41 today. That's $2.41, and that is down over 99.5% from its all-time high of around $466 back in December 2020. $466 down to $2.41. It only took 4 years to do that. Insane. Actually, less than 4 years. 3.5. So, is the purchase of this private jet really that bad? I mean, well, lots of public companies do require private jets, so I get that. And the argument can certainly be made that $1.7 million for a private jet is a really good deal, and it's really not that bad of a purchase, but it might be when you consider that Canoo's chance of experiencing financial distress is above 80% right now, and that pretty much results in bankruptcy most of the time. So one of the main indicators of that, though, is the debt to equity, which is sitting around 78%, and that's not terrible, but that's only going to get worse if the share price continues to decline. And the reason I bring that up is because the debt to equity is a pretty common indicator of whether or not a company is going to go bankrupt. You know, if that hits, usually the rule of thumb is 200%, okay, or a debt to equity of 2, depending on how you measure it. So 78% is really not that bad, but like I said, it's only going to get worse if the share price continues to decline, and it certainly has a lot of downward momentum right now. Their cash, and another thing is their cash and short-term investments is $12.7 million. And that's not great when you consider their net income was a loss of over $28 million last quarter, which means that if they continue at this pace of spending, they're basically going to run out of money in 2 weeks. There's no two ways about it. They have $542.01 million of total assets, which is great, but they really need to start producing a profit immediately if they're going to survive. Like I said, they do not have a lot of cash and short-term investments compared to how much cash they're burning right now. Hopefully that was all R&D and that's out of the way, and they can start fulfilling a lot of these contracts. We're seeing a lot of test vehicles go out, which is great, but they really need to start turning those test vehicles and those prototypes into actual vehicles and fulfilling these contracts ASAP if they're going to survive. All the EPS estimates I see going out to 2027, really none of them, actually not even a single one, are projecting a positive EPS, which is not good news because they really need that. The situation is absolutely dire right now. The only real saving grace is the fact that they beat all 4 of their last earnings calls by a pretty wide margin. I'll give them that. Also, they do have some pretty substantial orders on deck. They just announced a second Saudi partnership, and so they're still attracting some investor attention, which is great and a good signal. The deal with the Saudis is for 20 Canoo EVs into the fleet this year, with the option to expand that to 180 additional vehicles. The retail giant Walmart has just shown interest in about 4,500 Canoo EVs, but the big contract right now is with King B. King B is said to purchase 9,300 Canoo vehicles with an option to increase that to 18,600, but so far it's confirmed that they have only delivered 2 of those. So amid mounting concerns over a global EV slowdown, how it's going to impact those contracts is pretty uncertain, but with a chance of distress of over 80%, paired with the dire cash on hand situation and possibly, global EV demand slowing down, that's going to hurt their contracts. It just leaves the chance of bankruptcy or delisting way too high, and things are just not looking good for GOEV. But if you're a current investor or a possible investor and you think they're going to start being able to fulfill these contracts, they're going to, get their stuff together, they're going to start turning a profit, then the potential upside is actually ridiculous because, as a stock goes lower, the potential upside goes higher. And with the stock being so low, that means the potential upside is ridiculous. I'm going to link a video where I calculated, I think it was like 29,000% upside for Canoo EV. Thank you for watching, and I will see you in next video.